Well, good afternoon, everyone. It's 20 past 3 here in the UK on a really lovely afternoon here in West London. The S&P off 50 points as we speak, and I think that was a reasonably predictable sell-off. So the primary wave, or the short-term trend of the American market, has turned down, certainly intraday. We've got a long way to go until 9 o'clock UK time tonight. But if it finishes like this, the short-term trend of the American market has fallen and changed. So if I have a look at my dear friend, the S&P 500, it's actually panning out in a fairly predictable fashion. This was the last bit of the sell-off into the low, and then we had this push up and then this three-wave pullback. Now, in the video that I did the other day, I showed that if we take a fib from here to that low, that this high was a 2.618 extension of that. The first target would have been 1.618, and you can see that it went through it, came back and kissed it, and now we've got up here. Rarely do they go, they can go to 4.23 of an extension, but that is rare. And in fact, I've taken a short position this morning from underneath that two-day low. That two-day low is at 4253. If I had any strength at all, I should have been short from the fib level, but I waited for a two-day confirmation. The inside day, maybe if I'd been at myself a little bit quicker, I would have shorted the low of the inside day. Good God, it's got a long way to go. And an old desk head of mine a lifetime ago, he always used to say that never stare at the darkest part of your anatomy on a Friday. He didn't quite say that, but I'll leave it to your imagination what he in fact did say. Don't lose money on a Friday. It's demoralizing going into the weekend, so I'll be very, very careful open profits. Now, if under a bullish circumstance, if this is a wave 1, that's 2, this is 3, and we've got 5 lovely waves inside this wave 3. Possible wave 3. Now, if this is pulling back into a wave 4, the most probable target for a wave 4 is a 38% retracement of wave 3, and that would pull us into this big volume node here. As you can see, a huge amount of trading going on at or around this level. So a pullback to 4100, even under the most bullish of circumstances, could certainly be on. And of course, if we get a savage hawkish policy, then it can go much lower. We shall see. My stop is 100 miles away above the high of that inside day, and that's a bigger stop than I would normally take on these types of trades. I'm going to have to make a decision later in the day about holding it over the weekend. I'll leave that until about 7 or 8 o'clock tonight. I expect a great deal of noise. I've read this morning on a bank report that there's $2 trillion worth of options being closed out today, and as my dear father used to say, that's a fair amount of loose change. So expect a great deal of volatility during the course of the day. So that's a position, and if it did go to 4100, that would be a nice risk to reward trade, risking 25 or 30 points to make 139, 150. That would be really good. So that's ongoing. Again, the short-term trend on Vector is still down. Now, if we have a look across the markets now, and we have a look at gold, I'm waiting on gold. I've made no secret of that. I made some money on the way up here. and it's pulling back very nicely, and that's and my 8-day stochastic is getting down into the oversold area, and I just need some form of a reversal here. This little run up, if you actually blow it up into the 4-hour chart, you can actually see a nice 5 wave up here. And as I've shown many times, there's a huge amount of support here. And if you look at a monthly chart, folks, you can see a classic accumulation pattern here, which would be a wave 4. I went through that in detail with the Vectorvest people on Monday afternoon. So where's this going to go to? So if we have a look at the fibs here, and to there, I think we're probably heading here. The 50% retracements at 44, the 62% retracements at 30. So I think we'll probably go a bit lower here, but I need to wait for a reversal candle and the old stochastic to turn up. Now, interestingly enough, on if we look one time frame up, get rid of that for a second so we can see the wood for the trees. I hate charts that are cluttered. If I put up a weekly view of the same thing, we can see there's that big pattern that I spoke about, consolidation, which I think is a wave 4. We can see that the weekly stochastic has still got a lot of oomph in it. It's not even at 50 yet. So if we do get a turnaround, then we'd be trading in the direction of both the daily stochastic and the weekly stochastic, and that's what I'm looking for. So I'm looking for a low risk entry where I can risk a few points to make a lot of points, and that's the only way that I've been able to be successful at this game. And then the last market I want to talk about is the oil market. And that's getting to a very interesting juncture. So I'm starting with a weekly chart, which I probably should have started with on gold as well. And it's pulling back. Now, if my friend Larry Pesavatis was here, he would say that this is starting to get into a perfect Gartley pattern, made famous by a guy called Harold McKinley Gartley in a book who wrote How to Make Money in Stocks. How to Make Money in Stocks, 100 years ago. That's clearly an impulsive run up, and we've got a 3-wave pullback. The stochastic, the 8-week stochastic, which many people say it's naive, but nevertheless it gives you a great deal of discipline. It's saying that statistically you're better off being a buyer now than being a buyer there. Better off being a buyer there than being a buyer there. So it adds a great deal of discipline, and those of you that don't realize that you need something to instill that discipline, unfortunately haven't been at this game all that long, because execution is the key. I'm starting to see a little weekly wick on this candle, a tweezer bottom. I don't know what the candlesticks, but certainly there would seem to be accumulation. And obviously, as you can see, we've got this trend line, which maybe I've fiddled because I've ignored that one, but I put it as best I can. And we've got that old top. So this resistance has become support, and we've got a 3-way back. Is it going to spring up? I have no idea, folks, but all I do know is that come Monday, I'll be looking for an entry on the daily chart where I can risk a few points to make a lot of points. I think that if this is going to run up, that it will, under even the most bearish circumstances for oil, that it'll run up to about 113 from here. Okay, so oil stocks in general, I think, are worth a punt at the moment. This market's come an awful long way. I have, for once, I made a great deal of loot out of just shell, boring old shell, on the run up here. Plus, it's paid exceptional dividends along the way, and that wasn't an easy trade. The good trade is always the hard trade, folks. that trade was motivated by the work of an American trader called Michael Steinhardt, who always used to look at markets that are completely clapped out for a reversal. So there's a fib level here as well, from that low to that low, and as you can see, well, I hope you can see that the stochastic, if it does give a bull reversal here, that would be a reverse divergence, a very powerful pattern. The price is rising, indicators falling, very powerful pattern on a weekly chart, and it's being accumulated at exactly at this confluence. It's a three-way confluence of fib. I haven't put the fib in, the trend line, and probably the most important of the lot, resistance becoming support. Clearly it can fly here. It can actually go to a 1.618 extension of the pullback, and that would take the darn thing to 157. I'm hoping for all our sakes that won't happen. Those of you that have been watching the news will have seen that number that came out of Germany this morning on inflation coming off the factory floor. I had to read it 2 or 3 times before I believed it. I thought it was a misprint. So I'm hoping that this will get up to here, but nevertheless, buying in somewhere around here and getting out at 114, I think I said the number was a moment ago, that would be a nice risk to reward trade. And folks, the risk to reward is in terms of your profitability, my profitability, more important than yours, my profitability. The risk to reward is much more important than the hit rate. If you've got a risk to reward of a miserable 2 to 1, you only got to be right about 30% of the time to break even. A risk to reward of 5 to 1 and 2 or 3 good trades, and you've paid for an awful lot of bad ones. So that's the 3 markets that I'm looking at. I'm looking at oil for next week. I'm looking for gold for next week. And as I say, I'm short of the SPX now, based on that 2.618, the 5-wave pattern. And I showed it to the Vector-Vest people on I think Monday it was, that there's a huge reverse divergence on the SPX weekly chart, which unfortunately reminds me greatly on the technical picture in the rundown to the low on March the 9th, 2009, the last wave down of the great financial crisis. First objective, the first objective to make some money this afternoon. The second objective would be a target of 4100. So I hope that helped, folks. I'm, as I say, I don't want to lose money on a Friday, and I'll make a decision later on as to whether I'm going to hold this overnight. I may cut quite a bit of it if I'm in profit, and let a tiny position run overnight, and I can always add back to full size if it looks good early on Monday morning, even very, very late on Sunday night. I shall be spending a weekend walking on Hampstead Heath. I hope the weather is going to be good. So I wish you all a great weekend. Take care of yourselves. Bye-bye.